Hi, it's Michael Kerr here, presenting Small Business Banter. Welcome to the Small Business Banter podcast. I'm Michael Kerr, your host, and I'm also the founder of Kerr Capital, where I work day to day with business owners. The Small Business Banter podcast is built just for business owners and will be especially relevant if you're an owner looking to sell, if you've been unexpectedly approached by a potential buyer, or if you're an aspiring owner about to buy a new business. There's a lot on the line personally and financially. It's stressful, it's emotional, and it's usually new territory. So to help, each episode of Small Business Banter is a discussion between me and another business owner or an experienced small business advisor. We talk about their experiences. So what you'll get is practical, real-life advice, different takes on everyday problems, and a renewed confidence to tackle your own business challenges. Welcome into edition 144 of Small Business Banter, the podcast. I'm really pleased today to be joined by James Meldrum. Welcome into Small Business Banter, James.
Thank you, Michael. It's lovely to be here.
You've been very generous in volunteering to come on. We traded a few emails, and I think we've tracked each other's business lives over the last 15, 20 years. But James, I'm going to let James do all the talking today. James and his wife, Monica, have founded a business called Whole Kids. And he's gone through a pretty traumatic last few months, but culminating after 18 years of owning and starting running that business. So we're going to talk in depth about what's going on there, but take from that some of the lessons that James and Monica have learned to share with other owners. We're going to talk at the end about what James is doing to move on to another opportunity, another phase of life. But James, could you give us a little bit about your pretty diverse background? You've started, by my count, 4 businesses, but you've also had a couple of directorships and worked in big corporate. So,
sure, Michael. Well, actually, my previous incarnation was as a town planner, believe it or not. So I started off being a town planner. No, it wasn't. No, I've subconsciously buried that now, or consciously buried it. But yeah, I started off as a town planner and worked for a number of years in that sector, and just kind of realised that it wasn't quite for me. So I ended up being accepted into an MBA at Melbourne University. Melbourne Business School, and completed that, and then worked in corporate, and it was kind of opened my eyes really to the whole corporate world, which was very different to the town planning world. And from there, I worked in a lot of quite a few big companies, so Telstra, CBA, ANZ, BHP, and worked in more sort of strategy, business planning, and marketing roles. And I worked in that sector for about 10 years. And when I was actually studying, I was quite fortunate to be chosen to do an exchange program over to Georgetown University in the US during my final semester, which opened my eyes even further. And very much on the business side, opened my eyes to, I guess, what's now become quite popular is sort of purpose-led businesses and values-led businesses. And at that time, I'm going back a long time. This is 1992, so well over 30 years ago. And at that stage, this idea of purpose-led businesses or values-led businesses was really very new. And in fact, the MBA, it wasn't even touched on, it wasn't even spoken about. No, it was very finance-driven. In fact, the typical career path out of the MBA was to be a management consultant or investment banker or, or an analyst, business analyst or something like that. But while I was there, it was quite eye-opening to see these businesses like, Ben and Jerry's and Patagonia and, companies like Method Cleaning and Stonyfield Yogurt that had just sort of emerged and were starting to do business very differently to, I guess, the way you were taught in an MBA about how business should be run. And it actually kind of resonated with me a lot more than the teachings of an MBA. And I felt that, it not only struck a chord, logically and mentally thinking, this actually makes sense, but, also emotionally and sort of in the heart, it's like, well, I think this is where, my personal values really lie. And so I came back and then, as I said, I worked in Telstra and big companies, and I just felt this dissonance between those sort of organisational cultures and what I was seeking. And after about 10 years or so, 15 years, my wife and I were actually thinking, she was working in corporate as well. We were living up in Sydney, and we were getting quite fed up with these environments and thinking, there must be a better way. There must be a more satisfying way to earn a living. And we just started tossing business ideas around. And, I guess we had no real intention of setting up a business together, but we were just exploring ideas. And something that always seemed to come up in our discussions was the conversations we were having with our older brothers and sisters and other siblings. And, we've got, I think on last count, there's about 19 nieces and nephews in our family, combined family. So, and we're the youngest, just a small community, a good market research panel right there. And at that time, this is going back about sort of 2000 and early 2000, 2002 or so, we didn't have kids at the time, but a common, complaint or frustration we heard from our brothers and sisters was just how hard it was to find healthy food for their kids, healthy snacks, particularly once they're starting to go to school and, the great lunchbox dilemma and so on. And we thought, my God, is this the future we're facing, this battle to try and feed kids, a healthy, nutritious lunch and even snacks? And, we just sort of thought, oh, well, maybe that's an idea worth pursuing. And we kind of explored and thought, we don't want this to face this issue when and if we start having children. And so we just started exploring it, talking to people that we knew, and we found that
around the dinner table after both coming home from a corporate job.
It is, yes. So, over a nice bottle of red and thinking, well, okay, that day's done. Let's start getting serious about some other things. And it just kept coming back to this sort of problem. And we thought, well, someone must be solving this problem. So, we sort of just in our own spare time, we just sort of walked around supermarkets and looked at the snack aisles, the baby aisles and things like that, and talked to some people that we knew in the organic food industry. And no one was really addressing it. And then we talked to other friends of ours who had kids, because we were sort of late to the party on children. And it was a common refrain right across everyone. We thought, wow, this is a bigger problem than just, within our own family. And it kind of just, it just sort of germinated into an idea of like, well, okay, maybe it's something we can do about this. And at the same time, this kind of a seed that had been planted while I was studying in America around, sort of purpose businesses and values-based business. And I thought, well, if we're going to do this, we don't want to be recreating this kind of business environment or this business machine that we'd been working in that's obviously frustrating us. So, let's be focused on our personal values and let's build a business based on what we think a business should be run, which was a very, I guess, for us, it's a new way of thinking. But for us, it seemed almost entirely natural to go down this path and, not to focus.
You had really strong alignment between this idea for a business and where you both were personally.
Yeah, very much so. And Monica was coming from a similar personal direction as well. She'd spent time during uni on an aid project in Indonesia and worked with a lot of kids in very remote communities in, helping them build playgrounds and things like this and support services. And she was very much driven as well. So she was getting as frustrated as I am with sort of the corporate structure, and thought, well, okay. But again, we kind of didn't think we'd be working together on a business. We were just exploring ideas. But anyway, one thing led to another. And, as we talked to more and more people, we realised that there's a potential opportunity here, because obviously what mums and dads were seeking was not available in, the mainstream supermarkets at the time, and certainly not in, really specialty stores. You really had to hunt out products, and most of it was from overseas. And a lot of it didn't taste great, wasn't in convenient packaging, and kind of the flavours were very, either US-centric or, so it wasn't really a satisfying product range that was available at the time. So we started putting our thoughts together and thought, okay, well, what could we make?
It sounds like a double whammy. You're going after a new food offering, organic, and you were going with a structure around purpose, and which, that's it's probably two levels of complexity higher than a lot of other business launches. Fairly grand ambitions.
Yeah, I think it's probably even a triple whammy, Michael, because neither of us had food industry background either. So we were stepping into a sector where we had absolutely no idea what we were really doing. And I think in one respect that gave us, a slight advantage, because sometimes if you don't know what you don't know, then you can ask quite obtuse questions, and you can explore things and analyze things in a different way, not just necessarily accept industry conventions and the way things are always done. And we came up a lot against those sort of barriers about, well, why would you do this? Like, not, there's no need, there's no market need, there's no customer need. Why would you be even looking at this? And
presumably a lot of that was coming from the established businesses who were corporates.
Yes, they were. Yes. Yeah. And even suppliers, yeah. And even suppliers that we were talking to. I mean, one of the first products we did was a Tetra organic juice, 100% apple juice. And it was just, no added sugar, no preservatives, just this pure organic apples. And even, talking to, a juice processor baguette that they were thinking, well, why don't you add this in? And why don't you add a preservative? And it's like, well, that's not what we're about. We don't want to add any artificial stuff at all. And then you go and talk to a packaging supplier and say, okay, we want to make this Tetra juice box. And they'd say, well, minimum run is 250,000 units. And it's like, we haven't even got a customer yet. So, I mean, this was
the first incarnation of Whole Kids, right? So that's your first
absolutely
product there. And
yes.
And it obviously went on to have quite a substantial range, very broad range of organic. But do you, like, in a sentence, what was Whole Kids, in terms of a company or a business? Was it focused on children only organic products? I mean, you tell me.
Yeah, well, we sort of clarified our purpose around, making it easier for mums and dads to create, a happy, healthy life for their kids. So there was no mention of products there or the kinds of products we would make. And yes, we were starting in the food industry to start with, but we always envisaged that this brand and this business would expand beyond food to service other needs that parents and families had around, not necessarily organic, but, sustainable, healthy, nutritious, safe products as well. Because, if you think of things like even toys and clothing, there's still opportunities there. Even, when we were talking, there's, so we could visually, sort of mentally, we had it sort of mapped out, but we wanted to start in food because we felt that was the most pressing and urgent need and point of frustration for people.
Where did Whole Kids get to at peak?
Yeah, so we ended up being ranged in about 3,000 points of distribution. So we were ranged in Woolworths and Coles, Chemist Warehouse, IGAs. This is over an 18-year period, Michael. So it grew very rapidly to start with. We were doubling revenue every year, and that was purely Monica and I going door to door selling to specialty stores.
By this time, you both had left thrown in your corporate jobs and
yes,
gone all in on whole kids. Yeah,
we had. Yes, well, it was actually the trigger point was 2005, and that was the real. Um, sort of the watershed moment of when the first Organic Expo was being held in Australia up in Sydney, and we thought, right, there's a line in the sand for us. So, yes, we haven't had, commercially made samples, but commercially made volumes of stock, but we had commercially made samples that we could show people and they could try it. So we thought, let's go to this Organic Expo. If the response is great, let's go all in. If it's not, we'll tails between our legs, we'll go back to the desk wherever we're working.
Did you feel like that was always the plan B, or were you...
Well, plan B was never really an attractive plan B. But look, the response actually blew us away. From my background in marketing and brand, I kind of deliberately took the approach where I wanted to make a presence that we were kind of a little bit bigger than we really were. Like, I wanted to give this impression that we were an established brand and, we were already out there, when in actual fact we weren't. So we took a big space at the expo. We opened it right out. We, colourful branding, everything talked about our purpose and what we were trying to achieve. And yes, we had a we had a table with literally a tub of juice underneath that we'd sample out. But the response from parents and even potential retailers was just amazing. And, even some people came up and said, look, I buy your product. I love it. And it's like, well, that's not possible. We're not even in stores yet. But it gave the impression, I think, that, we were already there, and we didn't need to sort of educate people too much about what we were about. And yes, there was an education process, but it had already started by that stage.
Was it a validation point for you both that we're really onto something here?
Yeah, very much so. Both from the customer and both from the retailer. So we got retail orders then and there that weekend. We even got some overseas export orders, and we also got the mums and dads and kids loving the products and walking away. And the next Monday we flew back to Melbourne, and we said, right, that's it, we're all in. And we moved all the savings that we'd had for a home loan deposit over into our first production run of the juice, the organic juice. That minimum volume we had to achieve. So it all went into that. Yeah. So, and then we're off and running.
That's when Plan B is really out the door, and it's all Plan A, right? We're all in.
Yeah, you are, and I think when you've committed, you potentially all your life savings into it, you're in. Yeah.
Yeah, and you've probably by this time put a couple of years into it, maybe.
Yeah, this stage that was probably 3 years of solid product development, research. We did take a couple of trips overseas to see some trade shows there, which were probably 5 or 6 years ahead of Australia. So we could actually see where the market was potentially going and what the categories would look like. So we thought, the market will move here eventually, and we want to be at that point, in 5 years' time, that we're an accepted brand and we can, get wide distribution. So, it was 2005 that we officially launched it in market, and started generating revenue from then.
What were you a B corporation at that point, or did that come later?
That came much later. In fact, it's curious because we were having these discussions with retailers, and it wasn't long after we launched that Coles actually knocked on our door and said they want us in their stores. We want to arrange you, and they'd kind of been following us around trade shows for a couple of years, and eventually they said, look, come in for a meeting, and we had a meeting with them, and we were talking about our purpose and what we stood for, and it was almost like a bit of blank stares. It was like, well,
the juice is really
it's like, but the juice is great. We want it on the shelves. It's like, but we also, this is what we stand for. It's like, but let's talk numbers, and So we talked, margins and prices, and we realised we premium organic product, low volume kind of cost structure, so we couldn't hit economies of scale yet. So the price was just too high. So, we sort of thanked Coles and said, let's come back and reconvene when we can perhaps increase our volume and get our cost structure down a bit. But they kept asking us back, every year. It's like, well, and eventually it's like, well, we kind of know what this conversation is going to be like because our cost structure hasn't changed. But there was a very fortunate kind of, I guess you could say, synchronicity. There was a change in buyers one year, and there was two women who were job sharing the role, and they were both mums, and they both bought our products from a other store. And they said, no, we need this. We need whole kids in Coles. We need this to happen for us. So that was very fortuitous because it allowed us to talk to a buyer that actually understood what we were about and what we were trying to achieve. So we could have more meaningful conversations about, exact product range and formulations, not just focus on price and margin.
They got you.
Absolutely. Yeah.
Was that,
absolutely.
That would have been a real milestone for you both to hear that?
It really was, yeah, and they were fantastic. They were very supportive in, then we then developed another range because they wanted to move down in age, and so we developed more of a toddler range under the Whole Kids banner. So it allowed us to, explore things and have the distribution there for us to be able to test it in market virtually. So it's a great way to test and validate products, having a partner like that there. But then,
in what you've described already in 15 minutes, the trials and tribulations of a startup are extraordinary. What the level of personal commitment, the ups and downs, the yeses and the nos, and it takes some doing to get it to 18 years in your case. But yeah, so I admire all founders and business owners that just keep on keeping on. When so you were about to say something.
Oh, I was going to say, I was just going to refer to your original question about B Corp. So B Corp, we got certified in 2012, and we were one of the first B Corps in Australia to be certified. And I was actually looking at it a couple of years prior because it started in the US, and I was actually undergoing the assessment. And it kind of, because no one else in Australia was a B Corp at the time, and so we would have been the first. But the B Corp assessment was very US-centric, and it was asking a lot of questions which weren't relevant to us. And I thought, well, in our view, the organic certification provides, accreditation and authenticity around our products. And I was looking at B Corp to provide, authenticity and third-party verification about us as a business, about how we do it, and governance and sustainability and social impact, and employee welfare and all those things. And there was nothing else available. There was only this B Corp certification, but it seemed so US-centric at the time that I thought it seemed like a lot of money, and it didn't seem relevant to the Australian market. So, but then I went out to dinner with a friend of mine who said, oh, we've actually just started the whole process of B Corp certification. I went, what? Okay, well, let's do it. Okay, so we did it as well, and we were one of the first, along with this other company, to be certified. So, and that's now grown into, I think, 2,500 companies here or something, I think. Wow. So it's been phenomenal, yeah.
I am intrigued at how many employees or full-time equivalents you got to with Whole Kids, and when was that?
Yeah, that was probably, initially we started off with, as I said, just Monica and I going door-to-door selling, and then as business grew, we realised there was some certain stress points in the business, so we needed to employ someone in our warehouse and logistics and packing and get all that sorted, and then we realised that our time was being much more drawn into sort of production, new product development, marketing, and, working with key accounts. So we started bringing in a sales team, and we ended up having, well, I think in our mind, quite a large sales force, sales rep force. So we had at least one person in every state, and we ended up having about 2 or 3 in Victoria from memory. And at that point, that was probably the largest we ever got to because the sales force actually outnumbered everyone else in the team. And
so
I think we
maybe 10, 15.
Yeah, we probably got to probably not 15 full-time equivalent, but certainly there were about 14 or 15 people involved, and some of them were part-time or casuals. And then, what we found was that the territories just started to sort of level off after a while. So, the prospecting decreased, and it pretty much kind of saturated certain territories. And so then we started looking at key accounts, and eventually we restructured it so that we outsourced all the warehousing and logistics to a 3PL provider because that was becoming an increasingly higher fixed cost on our business. Yeah. So we outsourced that, and then we realised that we moved to more of an outsourced sales model as well. It allowed us greater flexibility, allowed us to reach more markets geographically. We still kept a couple of sales reps on in the key states. And eventually we kind of moved to, before the end of the business, we moved to an entirely outsourced model where it was almost just Monica and I running the business, but we had people who were looking after sales management, account management, looking after inventory management and so on.
And at that point, you're both able to use your pretty extensive educational and, corporate experience in the roles you had. I mean, in early days, you do everything.
Yes.
But then it sounded like you professionalised or you outsourced to it over time, but allowing you to focus on what it's your business, but these are the things we both do particularly well.
Yeah, I think so. And I think fortunately for Monica and I, we both gravitated to areas where we had natural skills. Monica's much more of an extrovert than me, so she was really good with sales and presenting to key accounts and and production, working with suppliers. I'm a little bit more of an introvert and inward thinking, so I was really good on the strategy side, the branding and the marketing, and sort of the business analysis side of it. So looking at the financials and all that sort of stuff. But you're right, Michael. At the start, we were doing everything, and in fact, coming from a corporate background and an MBA educated background, you also had to unbundle a lot of the thinking that you brought to the business because what you are taught in the MBA is not, well, in those days, is not applicable to a small startup business at all.
It isn't, and it's more the pity. But you figured it out, and I think this is. I do want to get to your transition potentially back into some role like that, given all the experience you've gotten. But a couple of things, people going into business for the first time can be fooled with the experience they bring. And I mean that in the nicest, gentlest possible way. But when you get into that startup environment, you have to do everything because you can't afford or don't have, you don't know who else to engage with. So you end up doing a lot of things, and there's, you don't want to do that for the whole period of the business, but so you've got to learn. So you clearly were able to adapt that way, but also working as a couple, it takes some doing as well, and having that natural splitting of shared interest in the success of the business, but also then separating what you do well, and you do that and I'll do that. So, that's an excellent, you've done incredibly well there to get that far. So, in the business sense, I mean. Hi there. It's just a quick interruption to the podcast, and it's a message from Kerr Capital, a supporter of the podcast. If you're a business owner thinking about selling and you're unsure about what you should do, well, the worst thing you can do is jump straight into an unprepared business sale. Cross your fingers and hope for the best. If you want to take control, get a sense of what your business is really worth, and a plan to make it more sellable, then head over onto the Kerr Capital website, check out the value and sellability diagnostic. If it piques your interest, contact me, Michael Kerr, or book one of the free 45-minute diagnostic calls. Now let's head back to the podcast. So I do want to go to where how you funded the business, because this is a fast-moving business, and even though you're outsourcing, you're investing in brand and you're investing in all sorts of systems and processes. But so up until when was the first time you brought in any external funding, bank or equity?
Yeah. So at the start, it was all self-funded through our own equity, our own capital. And we brought in, actually, it was a family member on Monica's side that we brought in, who contributed a bit of capital, and also on my mum put in some money as well. But it was really, it was a nominal amount of money. It was really working capital requirements, and we did need, we really need a sizable injection of capital to really fund, because we really were just sort of going, I wouldn't say hand to mouth, but it really was, the money that was coming in was pretty much just going out straight again to buy stock and produce goods. So
living a pretty lean personal lifestyle through those early years.
We were, yes, and we didn't pay ourselves for the first, or maybe 18 months or so. Or it was very minimal amount of money. It was basically grocery shopping, I think, from memory, grocery and rent. And we had discussions with, actually, and this is kind of a curious thing in terms of over the 80-year journey, which I find quite interesting, is that we spoke to, over that 18 years, quite a lot of potential investors, both on, sort of family offices, private equity, venture capital, investment firms, even private individuals. And there was a really interesting and a curious dynamic when there's two founders, particularly, male and female, and we always positioned Monica as kind of being the founder because of the market we were in, that she's far more relatable, I think, to mums and dads than maybe a dad. But, that's just subjective, but that's just the way it sort of naturally played out. But when you're in these discussions with, sort of VC firms and investment firms, they're almost dismissive of the female co-founder in the room. And, I could count on more than two hands the number of conversations we had where quickly conversation was diverted solely to me, and or Monica was almost ignored, or she was treated quite flippantly as, not kind of a serious part of the business. And I found it quite offensive. And I remember one meeting, in fact, they were almost making a joke of the brand name and, the business. And, and I just thought, Monica, we've got to get out of this room, because this is a horrible environment. And there's no way they're coming on board as investors, because it would just be disastrous. We could never work with them. And that was not an uncommon experience. And it really frustrated us, because we thought there must be aligned investors somewhere out there that get what we're about. And I guess that's happened in the last 5 to 10 years with social impact investors and coming on board and looking for purpose-driven businesses and looking for businesses that create impact and environmental, social, or whatever their objective is. But at that stage, it was purely about, well, how do we how do we make a lot of money out of this, and how do we ramp it up and scale it? And it's kind of like, well, rapid scaling is actually the last thing we need, because the financial structure, the capital structure, and the operating model is not solid yet. It needs to grow organically, almost with the evolution of the market that we're in, because it was a growing market, but it was still evolving. And to suddenly treat us as, thinking we're suddenly this traditional FMCG brand, it's just the wrong way to think about it.
Did they ever ask you, what are you both personally trying to achieve, or was it always about what can the business do? When you go to bring in business partners or take equity, or the alignment thing between what the business is aiming to do and what you think you can contribute is vitally important. But also, once you're in bed together as shareholders, or on an advisory board, or you're even a lender, whatever, you also, it's vitally important to kind of be in bed with those that you think you can manage and have a shared view of, not a shared view of the world, but certainly alignment around the business, but also at some level personal. You're happy to spend time with them and debate business issues, and knowing that it's respectful and it's likely to be, I'm not quite sure how to frame that, but it gets overlooked, and people jump at money, and the money comes with personalities and values and other things that can really be very disruptive.
Yeah, no, you're exactly right. And I think like someone once told me, said, even if a good test is, even if you're looking at, employing someone or bringing on someone as an investor, if you think you can sit next to this person on a plane for 3 hours and have great in-depth conversations and get on, then they're the right person to bring in. But if you think it's going to be stony silence or awkward silences all the way, and you've got to try and fight to get a conversation, it's like, it's not going to work. It's never going to work. So, that's the good.
It's sage advice to, I think, almost to architect a few conflicts or challenges before you sign on the dotted line to see how you would go about working it out, and also how they respond. Is it the way you would? Yeah, it's but you can be in a fast growing business, and you can need capital, debt, whatever, money, and it's very tempting to jump at things. But so where did you go from there? You had some family and friends. You were talking to bigger private equity VC. What happened then, and how did you take some money and develop the business further?
No, we then relied on bank lending. So we relied on debtor finance because the sales were growing so much. That was at that time a good facility for us to have. Right. In hindsight, I wish we kind of unbundled ourselves away from it, because when sales flatline or start to decline, which they did during COVID, it's a bit like a margin call. It's a bit it's the devil's in the detail with debtor financing. So we had that facility, plus we had some overdraft, and we initiated later on a trade finance facility because we were just buying more and more product, particularly from overseas, which we needed the longer trade finance credit terms to be able to fund the production, which might be, say, 8 to 12 weeks, and then you've got shipping and freight. It might be 2 months there, 45, 60 days on the water maybe. So you're probably looking at maybe a 3-month turnaround before you receive the goods from overseas. So we needed, trade finance was just not set up to do that. So we needed, debtor finance was not set up to do that. So we needed a trade finance facility, and we pretty much relied on those facilities up to the point of when we did our first crowdfund back in 2020 or 21, I think. And that's when we brought in almost like 900 investors into the business.
Okay. I want to drill down on that. Are you happy to share what annual turnover you were doing at around this time?
Yeah, we were doing around about 6 million.
Okay.
Yep.
And I'm kind of not surprised that crowdfunding was a vehicle for you both, given everything about the way the business started and the way you set it up eventually as a B Corp and doing good, organic food. And so what was there more than just money there? Was there a reason? I mean, crowdfunding can be dollars, but it can also be fans and followers. There's a few different variations. So tell us about that.
Yes. So we were actually, I need to step probably 6 months prior to that decision to do a crowdfund. So we were actually in discussions with an ASX listed business to acquire us.
They approached you?
Yes. So we were in discussions with them. back in, so it would have been about 2019, I think, or 20. It was the year before COVID hit in a big way. So the first lockdown, 20, I think it was, yeah. And we were in discussions with them for a couple of months, and it was a serious negotiation. It was a serious offer, and there's a lot of learnings that we took out of that, and a lot of lessons. But at the end of the day, the deal didn't proceed, and there were a number of factors that influenced that. Some of them were of our own doing, and we had things like we had some bad advice coming in, which kind of reframed things in our minds, and which was not a great thing when you're halfway through negotiations, when you think, oh, this is not what I thought it was going to be. And on the potential acquirer, there was some personality clashes with the executive, particularly the CEO, that we were rather sort of taken aback with and kind of uncomfortable, which was quite different to the initial discussion. So it kind of all unfolded that, and we felt that they actually would have made a good partner for us because they had a lot of the capabilities that we were lacking, or that we would have to invest in ourselves to be able to keep growing and to keep scaling. So, we felt there was a good fit. Unfortunately, it did unravel towards the end. And we're here today, unfortunately, at this position we are. But it would have been great to.
Yeah, but it takes a lot out of you, those discussions. There's a sense of excitement about. I mean, by this time you've put 15 years into the.
Correct.
Enough. So, in terms of seeing out that your ownership, that's a great investment of time and energy.
It is,
15 years. So I can imagine how elated you potentially were going to feel to hand it over to a good home and perhaps stay involved, but at least have the opportunity to draw breath.
Yeah, absolutely. And we both felt, we had kids by this stage, and we weren't seeing them a loss. Even when we were home, we were not really home and present with them. And I'm sure a lot of founders and experience that as well with young kids and even older kids. But we felt that the timing was right. We were also getting a little bit tired and exhausted, and also we were just constantly battling. We're working in a duopoly with the majors, and it's a constant battle to stay on the shelf, and requires more and more funding to stay there, support promotions and so on. And it just was just ratcheting up every year, and we just thought this is just now getting exhausting. And so it was, you're right, it was very welcoming and very humbling to get this offer, and you think, great, this is a way for us to exit out but keep the brand going and be involved in some capacity. Unfortunately, it didn't work out. And then COVID hit, and then everything just went to crap, basically. Yeah. And for us, our experience was that we lost about a third of our revenue overnight, because we were servicing the airlines with kids' meals and special meals, and that disappeared straight away. So 30% of our revenue disappeared. And it was good, it was good margin revenue for us, which was really disappointing because the rest of the revenue was really tight through the majors. So there wasn't a lot of margin to play with. Our overseas manufacturers, in particular, reverted all the credit terms. So everything was now upfront payment. Everyone knows about the disruptive freight conditions that happened at the time. And also the cost of containers went up extraordinarily high. Like they went up from, I think we were paying about $5,000 a container to maybe $25,000 a container. So, and even then there was no guarantee that a container would actually arrive. It might be offloaded in Singapore because Singapore suddenly got a COVID lockdown or something. So, all those things, it was like a perfect storm of just everything hitting us. And, I know we're not alone in that. But it really put us on the back foot almost immediately. And it was like this cash cycle for us blew out from, it might have been 90 days, maybe, probably 80 to 90 days to 120, 150 days in some cases, and we just did not have any reserves to fund that. So we started covering all the bases. We looked at our banking facilities. We spoke to investors that we knew that were interested from previous discussions. We then looked at crowdfunding as well, and amongst all those things, we felt the bank offered some assistance, but we felt crowdfunding would be the best way to, as you say, to bring into the community, into the business to help support it and grow it further, whilst at the same time bringing in investment capital. And we turned that around. We turned that campaign around, I think, in about 4 weeks, which was just, even Birchall was scratching their heads going, how did you do that? So by the time
there's a few believers out there, by the sounds, who really did buy into what you were about.
Yeah, and I think it's I kind of look at what's happened in that space now around crowdfunding, and I think we'd already been around for 15 years. We were a proven brand, proven business. We had revenue, we had distribution. We'd just actually been ranged into Woolworths, so there was a lot of upside to the business. We just needed capital, working capital, and I see some businesses now in crowdfunding. They've been around for a couple of months and they're already crowdfunding with no revenue. I scratch my head going, where's this going? So I just, I have a big question mark over it.
Yeah, and you'd banked. Well, you had an audit trail and a 15-year trading history. So it's the decisions as about as informed as they can be, right? When you kind of backdrop.
And we also went in at a very, very conservative revenue multiple, valuation multiple, and we benchmarked that against other private sales that we knew of, and also publicly listed companies that we trade against, and we went in really, really low compared to other ones that were trading at about 6-7 times revenue. We went at about 2.9. So we were leaving, I think in our mind, a lot of upside potential for investors to, once Woolworths had kicked off, then the valuation of the business would increase, or the capitalisation of the business would increase over time. And and just as an aside, I see businesses now that are trying to raise money at exorbitant valuation multiples, and you just think there's going to be no upside for those investors if they come in, for those retail investors. There's some going up.
It's an interesting thing because you're putting in small amounts of money, and it's hundreds I think hundreds potentially of investors, and that sort of mentality of it's a small amount of money, whether it's at a ridiculous value or not. I think there are genuinely people who want to support brands and businesses that do things that they relate to. So the valuation principles or fundamentals might go out the door. But
it's true.
Yeah, I'm not saying it's right. I'm just saying it's the risk is diffused because it's a small amount of money. But that sort of doesn't necessarily, with both of our MBA backgrounds, it's not entirely rational.
No, and a dollar to you and a dollar to me is different to a dollar to someone else, and putting $250 into a equity crowdfunding campaign is for someone could be quite significant, and it might be their first step into investing as well, and you'd hate for them to have a bad experience.
I guess I think about this a lot with those. There's private equity and venture capital, and there's duopolies and monopolies and big corporates, and it's potentially a way to educate yourself. It's like going to the races when you're 18 and you lose a bit of money, and you really want to figure out whether you're a gambler or not. And it can be a good life lesson or a good investment lesson. Anyway, I digress. So the crowdfunding happened. Then what was this? We're calling it 2020. What was the next few years? This is really, I guess, the meat of our conversation today. So not to to relive it, but to share your experience of going through what you went through.
Yeah.
And Monica.
Yeah, and it really, sort of at the start of 2023 is when, I guess, a lot of those events, happened that led up to the decision to put the business into administration, or that decision was made. And we were in, we kind of realised that this, we call it the post-COVID hangover. And I think a lot of businesses are still experiencing it. And particularly for us is that we were still stuck in that cycle of, upfront payments, shipping delays and so on. And we could really never get out of that hole. Like, it required, more than the crowdfunding amount to really, to put us back on track. And to be able to reverse that 150 day cycle of converting cash and to re-establish terms with the suppliers and things like that. And we were, having discussions again with an investment firm probably early January that year, 23, which curiously, they were setting up an investment fund to invest in purpose-led businesses and businesses making impact. And those discussions went on for a while, probably about 2 months or so. And we felt that, right, this is, we're at the stage of, we're selected out of sort of 6 businesses they're looking at to be part of their portfolio, and we'll go ahead, and this will be the way we can move forward. And eventually what happened is that they shut that whole fund down. So we weren't the only one who missed out on being selected for the fund. In fact, they closed the whole fund and it never resurrected it. But that kind of
enough to get excited again.
Yeah. So it's a bit like dangling the carrot again. And we thought, right, we're really on the back foot here, and we really need to be able to find a way through this that can keep the business going as an ongoing concern, and also take advantage of some of these opportunities that we had, we were still, funnily enough, we were still growing in a lot of the major supermarkets. Like that year up to January 23, so the previous 52 weeks, we'd grown sales in Woolworths by 77%. We'd increased our half-year revenue, I think, by 45%.
So you had good cause to go out and be
absolutely
and positive, because the business is ploughing ahead, but the structure, your underpinning financial structure was not keeping up.
Yeah, and we'd done a lot of things to the business, Monica and I, in terms of the cost structure. So, we low margin products we deleted or reformulated. We'd done a lot of work on packaging formats and suppliers, and bringing suppliers back to us, bringing supply back to Australia where we could source locally, so we didn't have, these high freight charges and delays. And I think, if you looked at our P&L at that time, I think the figure was we'd increased our net profit by, we were coming off a loss, mind you, a very low base, but we'd increased our profit by over 250%. So all the signs directionally were heading the right way. It just required an investor to say, yes, I can see where this is going. They've put the plan in place. It just needs this amount of working capital to get over this hole that they're in. And we ended up finding what we thought, again, was the partner. And we had opened up discussions with one of the major retailers of Australia. And we went, that was far more diligent in terms of requirements on analysing the deal than the first one I talked about. And, we were dealing almost daily with their M&A team. And it got to the point where, we were discussing even job roles for Monica and myself. And so we thought, this is just going ahead. It's just a matter of now signing, getting the paperwork in order and moving ahead. And, we thought it would be a great outcome for the crowdfund investors as well. The brand would live on, and it would get the working capital it needed. It just ticked all the boxes. And then one morning we got, I think it was a Thursday morning, I remember, in July, we got a call from the head of M&A at this retailer and said, look, it was a 5-minute call and said, we're not going ahead, we're not proceeding. We said, why? And said, we've got other things to do. And it's like, you just let us on for 6 to 8 weeks and we put everything on hold for you. And we contacted the CEO and the CEO said, well, I just support the M&A team. We thought this is going nowhere. So left us with no other options, unfortunately. So the next day we had to decide to make that call on whether we can see ourselves trading through this or whether we feel that we have to go through a voluntary administration process to find a way to, perhaps bring in a buyer and keep the brand going and the business going. So it was,
Look, that must have been absolutely gutting to get a call against the backdrop of this going swimmingly well, and then the day after that, as directors of the company, presumably, can we trade here and get it? Are we going to breach any of our obligations?
Yes.
I'm assuming that's what you were thinking. Yeah.
Yes, and we got, we spoke to our accountants and our lawyers, and we felt that we obviously didn't want to do anything contrary to our directors' responsibilities and fiduciary duties as directors, and also we felt that even though the business was growing, it still was, we still trading on in that way, we felt would have been, making the situation even worse, and us knowing that we've made it worse. I think we just had to make that early call.
Do you think that having gone to 3 dances with 3 different, that by that time you're feeling like, can we even, generate enough drive and desire and energy to go again? Was that in the back of your mind also?
You mean if someone came through the process and bought the business and?
Oh, I mean, just for you two, you and Monica, to say the 3rd potential buyer that's fallen over now. To get back up and find the energy and the motivation to keep going, having been through those near misses, it must be a point where you go, it's too much.
Yeah, it is, and I don't think there's been a day since we made that decision, at least for me personally, when we called in the administration, they called in the administrators, and at that point you have no control. Like, you have lost your business. It's gone. It's now in the hands of someone else. So, you feel this weird sense of detachment, but also it's like this. It's like you boarded a train and there's no stops on the train. It just doesn't stop. It just keeps going, and despite all the the crap that you have to go through with administration and the stresses of that and the uncertainty and the anxieties, you still you get pulled back to those moments that you mentioned, Michael, those 3 potential deals, and you think, if only that had turned out different, if only we hadn't done that, or if only we hadn't made that decision, or if only that other person hadn't advised us properly, none of this, we wouldn't be here today in this situation. And when you go through that administration process, which only now has almost finished up, about, what's the date today? August. It's almost 12 months. It gives you a lot of time just to, it's almost like you just wallow in it, and it's just like this mud that's around you, and it's very hard to get out. And you feel that, you shouldn't be in this mud. It shouldn't be here, but it is you, and it sticks to you, and it's really hard to get off, and it's really hard to see a way through it. To think, yes, I could go again with something else, or I can see a pathway forward. And I've been thinking about this a lot, actually, with a lot of other founders, because I know some other friends have gone through the process, and some of them have moved on to other things, and some haven't. Some have gone back into a corporate job, or they've just done something else, but all through that, it's been this sort of impact on your own personal mental health and well-being. And I'm thinking, even through the whole 18 years, you have this underlying mental health and well-being issue anyway that you quite often just push to the side for the sake of the business, because as a founder and as a business owner, your own personal kind of sense of being and well-being and identity is wrapped up in the business as well. So it's not like you go to a job and you come home and then that's it. You can detach yourself. It's the business is you and you are the business. And I've actually been thinking about this more for founders. It's like, well, there must be some way to help founders deal with it, because I know as men, we're notoriously, challenged to talk about this, and founders even worse. They just don't want to admit that maybe, I'm struggling here. I'm stressed out, or that failure. Like we had, and call it what it is. There were 3 deals that fell over, and that sense of regret and sense of, gee, was I the one that really effed it up, or and so you take it on and you internalize it.
Well, it's your business. You've put so much of yourself into it. And with Monica, and you're right. It's take on owners and founders. There's no easy businesses, and it's some are more complex than others. But what you've got to do to keep steeling yourself to get through is nuts. And it's really contrasted when the head of M&A for that big retailer, 5-minute call, no, we're not doing it. They're not attached to anything other than their KPIs, and that's fine. That's how they operate. But there's no personal, for you, you'd love to get a great financial outcome, but you've got other objectives for the business, because you started it with Monica, because it's doing good work, because it's making good product. And it's just such a contrast between and I suppose that's why in the beginning you kind of railed against the corporate roles and went and did your own thing. So it's the strain and stresses that you think you should put up with. We've all got to really question whether they are actually worth it. So voluntary administration, that's coming to a conclusion, is it?
It is on our sort of personal side. So the business, or at least the assets of the business, were sold to were acquired by another business who have since taken over all that. So we've got no involvement with that business whatsoever. And I won't say anything about what they're doing or how they're treating the brand. I think that's for them to decide now. It's their assets. They can do what they like. Personal side, we've now obviously, there's personal guarantees around those debts that we've incurred as the business, and we know we still need to work through with our bank about how we navigate through that. So that's kind of now the pointy end of discussions for us personally. Yeah.
So let's go to what's next for James and for Monica, because that'll take its course. I can only hope that it's as good as it can be. But what's in the wings for you both?
Yeah. Well, fortunately, Monica has secured a role with Asahi Brewing as a entrepreneur in residence. So she's working as part of their, they've called their internal disruptive team. So working on new projects, new ideas, new businesses. And I think she's quite energized about it. She's enjoying it immensely, and she's working on something which is quite different to food within that. And, I think for her, and also for me, a lot of the stress of actually running the business is now gone. It's just a different form of stress we're experiencing, different form of anxiety and frustration. But
do you think with Monica that's a little bit in the past, because she's now got something to pour herself into, and just maybe don't have to think about the what ifs and.
Yeah, absolutely, Michael. And I think that's, it's kind of like that old saying, the devil makes for idle hands. So, yes, she's been able to throw herself into something and, move forward for that. For me, it's taken a lot longer for me because I guess my skill set, I've been applying for roles and talking to people, and because my skill set's marketing and branding and quite, narrow in that respect. I think I'm competing with people who are 20, 30 years younger than me, and, I'm not getting very far in interviews. But having said that, I have set up a business or a consultancy for myself that I actually want to try and help other founders and other startups, learn from kind of the experiences that I've had and both Michael and I've had with the business, and, to give them, a framework and a pathway to say, well, these are things that you should probably look out for on your journey, particularly when you're doing things like talking to investors, potentially raising capital. Your business model, doesn't necessarily have to be within FMCG, the sector, because I think universal principles, even staff management and team employees and culture and engagement, and, particularly how to run a purpose-based business, how to make your own personal values part of the business that you want to operate, and how you bring that to life. I think there's as I come back to this point, it's, for a founder, the business is you and you are the business. And I think, if you can effectively meld your personal objectives and your personal goals with what you want to achieve with what you want to achieve with the business, then, it's a win-win for you. I think sometimes founders put aside, their own personal aspects to deal with the necessities of the business, and, their health suffers, family relationship suffers, and, even friendships suffer. And that's not good. That's not good for anyone.
No, and I feel like with you, James, this is where there's got Monica's moved to that role. You've got so much on the ground experience to help existing founders and potentially prospective founders or business owners, because you've been through an awful lot, and so I hope there's some really aware organisations that can put that to good use. If you were talking to a founder who's year 3 or year 5 or something, what are the top 2 or 3 things that you talked about? What are your top 2 or 3 things that you would say could make them more successful, more sustainable, not necessarily more successful? I think we talk about sustainability, which is it's a combination of being able to hang in there, but also enjoying, some of the fruits of your labour.
Well, I think one of the first thing is, for us, it was just this necessity, or this perception of necessity for growth, and growth for growth's sake. And I think in some respects, yes, we needed growth because of the economics of the business required scale economies. So, higher production volumes led to lowest unit costs. So, one respect, that was driving it. But in another respect, it was the worst thing we could have done, was just to keep trying to grow, because it adds complexity to the business that you're not aware of. It also adds pressure on you to keep that momentum up. And also, you've got to be really sure that the structure of your business can sustain growth. And for me, there's nothing wrong with staying small, and nothing wrong with growing even organically, in a sense of just, in response to natural market demand. And I think if you try and leap yourself ahead of the growth curve, or ahead of where market demand might be heading, you get yourself into all sorts of problems. And I think it builds stresses in the business where it can quickly crumble around you. And I think, it's better to be smaller, stronger, financially viable and sustainable than it is to be, and this is different for different sectors. And I know tech industry is different, to FMCG and other sectors as well, where, growth is key. Growth is the ultimate objective because VCs want it or your investors want it, and it's the paths to exit. But, in our experience, or my experience, and in particular in our sector, is there are a lot of forces pushing you to grow. One being the duopoly, the distribution that's available to you means you're forced to grow in some respects. But the counterbalance is that it's really hard to grow as well in the Australian market, in this sector, because a lot of forces work against you on the other side of that. And it sounds like a kind of almost like a contradiction in terms, but there's incentives to grow, but then there's also disincentives to grow. And I think you've got to find your way through that to where you personally as a founder are comfortable in the direction you want to go. And I think that's another aspect I learned, is to be really clear on your own personal motivations about why you set up this business. Like, we set up this business, and I set up this business because we really wanted to make a difference to kids' health. And over that 18 years, some of those forces I was talking about were trying to pull us off track and focus on purely financial growth or revenue growth or industry growth or whatever you want to call it, or pure business metric growth, and forgetting about the fact that actually we're here to make, primarily for us, an impact on these issues that we were so passionate about. And I think for us, it probably would have been better to get to grow more slowly, and have more impact at the same time, knowing that, and one thing we did, obviously you can't predict those black swan events like COVID and things like that. But, if we were in a stronger position structurally within the business and also financially, we could have weathered that storm a lot better.
Yeah. Yeah. Look, it is a black swan event, and it's the effects are still being felt right through to now for a lot of businesses in the business, but at the owner level as well. How much have you got left in the tank to keep reinventing the business or just surviving? But that big, I think that's a really significant opportunity for every owner to really think about their business as a vehicle for doing good work, but also knowing when enough is enough. And there's, as you say, there's so many pressures. If you bring in the wrong kind of investors or equity, or with expectations of growth, you have to tag along because that's what you signed up for. But turning it away is hard, or at least turning away the wrong kind of investment maybe needs some more active management. Did you have governance along the way in terms of an advisory board or trusted advisors that you were able to chat to about business, but also about the personal stuff, which we've talked a lot about?
Not to the extent that I've now come to realise that we should have had. The advisors that we did have in place were very much focused on the business. So, advice around accounting, and just, we had other people who were already in the industry that, were ahead of us and advised us, sort of ways to deal with, for instance, say the major supermarkets or suppliers or something like that, based on their own experience. And, but we didn't have anyone that, you could actually go to and just say, this has become just a shitstorm, or I've just had enough. I'm just so stressed out. Yeah. And I think because we were a couple working in the business, we tended to lean heavily on each other in that respect.
That is so,
I think that in hindsight, it just adds more stress to the other partner, which is not helpful or healthy at all. And I think there is a need for founders to be able to, and it doesn't necessarily have to be something like, say, a mental health line or something like that. And I think there's a real reticence about using those sort of services, but you need to have someone in your life who is not part of the business, whether it's a really good trusted friend or someone who you can then just divulge all this stuff on, saying, oh shit, this, I just don't know if I should shut the door tomorrow. I remember there was a friend of mine who started up a business just before us when we started our organic food business, and I remember very clearly he was under a lot of stress towards the end, and I remember one conversation he said, look, I just feel like I'm jumping off, and it's just like, whoa, this is serious stuff. And I bet you are not the only one going through this, because, I haven't felt it to that regard, but I've certainly felt the weight of just like, oh God, this is just crushing, and I feel trapped in this thing, or is there a way out? Should we just close it now and move on to something else? And you do feel like an imposter. The imposter syndrome is very real. You feel like, no, you're not capable of getting through this, or you're not skilled enough, or you're not knowledgeable enough, or you're not worthy enough.
Or that which can morph into it. Therefore, it's me, and I'm going to have to find a way. And it just kind of uplifts the pressure. And I see this as your incredibly rich experience over the time is being able to help other owners and founders who I really have a strong belief that there's a lot of great technical advisors, expert advisors, but the ones that can straddle understanding what you're going through, but also understand you as an individual and say, hey, James or Michael, it's not worth it, or do you really think that is what you're after? Do you think there's another way? Because I care about you individually as well as, and your business or your whatever is. It's not everything.
Yes.
And it can default to being everything. So we're getting into pretty heavy territory, but it's certainly. I think one of the aspirations I have for the podcast is that owners will get a lot from hearing it from other owners or other founders. So that's why I'm so appreciative of you coming on and being so open about what you've been through, and that I think finding some outlets and some other people outside the business. It's hard enough. It's hard enough being in business and going home to and I have these discussions a lot more often with males, because a lot of business owners are males, and there's this break, there's this inability to discuss what's going on. Sometimes an incapacity because they don't want to share it with anybody else. But there's also they're not sure who to talk to, and they can't talk to senior staff, and can't go home necessarily and talk about it there because it's and then you're in business with your wife. So it's tricky stuff.
Yeah.
From the business perspective, but also maybe I don't know, you might have been the best thing for you.
Yeah. Both. Oh, look, in hindsight, Michael, I'm also really grateful and optimistic about what's ahead, and that 18 years Monica and I did amazing things, and we're so proud of all those achievements. And yes, we didn't get the exit, or the deals didn't get through. There's a lot of things that we did wrong, and we'll happily own them and learn from them. But at the same time, we broke through a market category that really didn't exist at the time, and led the way in really opening it up, and for the other brands to follow. And I think it really led the way in how you can meld purpose and impact into a business and thrive. It's not always about profit. It's yes, you need profit to keep going, but you can make an impact at the same time, and a positive impact in a way that is valued by the community and your customers and makes sense to your personal values. And for 18 years we were doing that almost every day. So I'm enormously proud of all that we achieved. Yeah. Yep.
Yeah. Look, that's You absolutely should be, and I think that's the next stage. And I'd like to think that, as I said earlier, some organisations that could really tap into that, because you bring both deep corporate experience, but also 18 years in the trenches of running a business. So, James, look, I think that's probably a pretty good note to finish on. I really do appreciate you taking time to come in and have a chat on Small Business Banter, and I wish you all the best.
Thank you, Michael. Thank you.
The next stage, and Monica as well. And the note we're finishing on is that you did achieve an incredible amount as a business for purpose, and great for consumers. So well done to you both.
Thank you, Michael.
If someone wants to reach out, James, what's the easiest way for them to contact you?
Probably just my email, I think, or just look up LinkedIn. My email is jamesmeldrum12@gmail.com, or you can just find me on LinkedIn. But yeah, if anyone I'd love to connect with people and take this further. And Michael, thanks again for all your time and having me on. It's been an absolute pleasure. Thoroughly enjoyed it.
Well, I have too, and I have noted, you've been posting some really interesting stuff on LinkedIn in of late, and so let's hope keep in contact about what's next for you personally. So thanks again, James.
Thanks, Michael. Enjoy your day. Bye bye.
Well, I hope you enjoyed that episode of Small Business Banter, and I hope it was helpful in you getting the most out of your small business ownership. To subscribe or listen back, or to check out any of the resources or information we talked about today, head over to the website smallbusinessbanter.com.au. Or if you want, search up Small Business Banter on your favourite podcast player. Don't forget to subscribe, and if it was really helpful, I'd love it if you told another business owner about the podcast. If you thought it was exceptionally helpful, then how about you leave me a 5-star rating? If you think I can help personally, please reach out to me, Michael Kerr, via the website. There's a new episode out every couple of weeks. We'll catch up then.